I'm Dominic Hobson, co-founder of Future of Finance. My guests today are Francesco Biviano, founder of Geneva-based STOverse, and Florian Ducommon, a partner at Bonnard Lawson, a lawyer specializing in fintech and blockchain in Switzerland. STOverse is a startup whose mission is to create a security token fundraising platform for small and medium-sized companies. It has one intriguing twist, which is to build a bridge to the tokens being traded on DeFi exchanges. Tell me, what are the principal problems that you think need solving in the capital raising, capital trading markets? You're focusing on SMEs, for example. What are the problems you see there that you think that STOverse can solve?
So what we are actually trying to solve with the problem that we see that with capital raising nowadays is there is a clear problem of exit opportunities. When we talk about crowdfunding and investment in small, medium enterprise, one of the main problems is the lack of a secondary market to actually exit your position. This was the main problem why many people lost confidence in crowdfunding. So we're talking about this lower entity project, like, yeah, exactly. And this is one of the main problems, not having the possibility to actually exit from your position, from your investment after a couple of years, just waiting for like maybe one of these projects really being able to do an IPO at some point. This is one of the main. Another problem for crowdfunding and also SMEs was in theory, the quality of the project. So the quality of the project that was listed on some platforms was clearly one of the problems, because you need a proper valuation of the project before actually proposing to the people. And maybe in some cases, the valuation of this project was not done correctly and was probably overpriced. On top of that, for like actually trade, this is to connect to actually the problem of a secondary market is the limitation of trading equity, because for crowdfunding, for instance, those are limited by national laws, while having these onto a blockchain, then these problems are not anymore a problem, since all the transactions are on chain. So these are the three in capital raising and capital rising. The problems are definitely, so to recap, lack of a secondary market, the quality of the project that we have seen, and actually being the limitation posed by national barriers. And for capital trading, the actual problems in the traditional system, which we see, are actually the settlement of security and the process of standardization of some securities. While with all these blockchain securities, this becomes much more smoother and easier. All these limitations are removed, and also new ways of actually providing liquidity to some project for some SMEs is actually going to be done. For instance, in the traditional system, you need a buyer and a seller, while in how it works in the centralized world, there's actually not going to be necessarily the need of a buyer and a seller for projects to have a lower liquidity. So for SMEs, which have maybe don't have that many buyer and seller, but with already provided liquidity by the company, people will be able to buy and sell without actually need of any without the need of waiting for a buyer or a seller.
Can I ask you to just clarify that last point you made?
Yeah.
You've been very clear that one of the problems with crowdfunding has been the lack of a secondary market where people can actually exit that they've made. You've been clear about ICOs. But the quality of the project was quite difficult to understand, even if there was a secondary market on some trading platform. We've also been clear that IPOs are expensive and inefficient for smaller companies.
Exactly.
But the last point you're making, buyers and sellers, clarify it for us.
Yeah, sure. In the traditional system, when you buy and when you actually want to buy or sell a security, you need to have a counterpart which actually is your counterpart whenever you need to buy and sell. And this often the traditional system what create the spread in what we call the spread of the price. So this issue is solved in a decentralized exchange because we don't have anymore a buyer and a seller. You're just interacting with the smart contract directly. So basically what you're doing, so basically how it works, you have already some liquidity, which is provided in the pool, is already provided. And so basically, whenever you want to buy or sell, you don't have, the liquidity is somehow already there. And you don't have to wait for a buyer and a seller. And the balance between the two securities, between the two, let's call it, the two securities who are in the pool are actually determine the price. Now the price is basically already algorithmically driven, and this will will help all these issues of liquidity which are into traditional system.
Right, so I get it. You're bringing the liquidity pool model from DeFi to the world of security tokens. Now that's
exactly,
in a way, this is your unique selling proposition, is that you're bringing together the world of security tokens and the world of DeFi. Are there, and that automated liquidity, if you like, is one of the advantages. Are there other advantages for investors in bringing those two worlds together? Can they start, for example, to start lending or staking their security tokens on DeFi platforms? What's your thinking about in general about that link between these two worlds?
So what are the benefits for investors, right?
Yes, and we'll talk about issuers as well, but investors start,
yeah. So the benefits that we clearly see for so let's start with the issuer. So a clear benefit for the issuer is the rapidity on which you can actually issue your tokens. Like, let's say you have to go through an IPO, it will take months and years. While with the system that we have now today, you can actually issue the tokens in a month or 2 months, let's say. So it can be done very, very quickly. Another option is exactly you have more control and on the governance. So you have and also the ability to distribute these tokens to potentially employees and people who are involved in the company somehow. On top of this, exactly for the investor side, well, like actually it's easier, and also for the issuers that can reach a wider audience, so worldwide audience. For the investor side, so how we can what is benefit is actually entering in this quality project in a pre-sale. So while holding our tokens, they will be able to enter in a pre-sale and buys these tokens of these security tokens of these new issuers. But on top of this, exactly, they will be able to sell these security on a secondary market, or also which is the benefits for an investor is not only earning from the capital appreciation of their shares, but also earning passive income from staking, liquidity providing, and lending. So all these are additional ways on top of which investors can actually earn a passive income, which was not possible before.
You made an interesting observation there about security tokens, which you can issue these to employees of the firm that's basically undertaking the STO. And of course, one of the interesting things about DeFi is that it does dispense with not just with the intermediaries, which you've explained, but it also kind of obliterates this distinction between customers, employees, issuers, investors. Where the users of the product or service can become also investors, shareholders in the business, and therefore get profits from it, as well as the utility of buying or using the service. They can get involved in the governance, they can start to vote on decisions, and they can often, as you say, work for the company. They can be collecting a salary from it as well. Now, are you finding when you talk to issuers that that's a big selling point for the model that you've got, is that it has this, it kind of obliterates the distinction between different functions? Yeah,
exactly. That's quite interesting, exactly, because as we are going through our process and we are getting customers who are interested in our process, one of the interesting things we found that is really making companies and issuers interested is actually the governance process. So clearly impact companies that are related to the impact investing. So they're really concerned with the governance of their projects. So this kind of company is really interested into how tokenization can actually simplify and enables and improve their governance, because they're actually saying that if all the stakeholders in their process, like from suppliers to clients, could become our clients, but as well as investors somehow, they are also more engaged in the project and in the whole ecosystem created around a company. So what we are seeing that's really interesting, what we have enabled in our platform, is actually for people who are shareholders on the platform to actually vote on things. So the company will be able to actually exactly go on the company will go on our platform and actually ask things to its shareholders, and shareholders who owns the security tokens will be able to vote directly. And this is an interesting point that a lot of companies find really interesting. And on top of this, the ability to easily give these tokens to employees definitely is create an interesting advantage of this technology.
Now, you're obviously talking to potential issuers, and I assume that you're talking mainly to SMEs, which are your target group. How do you go about finding them, and what's the strategy for recruiting them to take part?
So how we are doing today actually is we are partnering with private group of investors. So we are partnering with group of investors who already have companies onto which they normally invest, and they actually are partnering with them since some of these companies are looking to be tokenized. So we're looking for partners that already have an ecosystem of companies and investors, because that's what we're going to need at the beginning to really push our platform on the market. So having someone that has already a built-in ecosystem at first. Secondly, private group of investors, and secondly, we are partnered with great universities such as the Polytechnique of Lausanne, the EPFL, one of the most renowned engineering school, and they actually have a great, very important network of innovative SMEs in the campus. Like in the campus, there are around 200 startups and SMEs, and we are partnering with them to actually look if some of the companies there are interested in our technology, in our technology. So this is the two way we are seeing. Of course, events and everything, but private group of investor and partnering with the university is our main way to get SMEs.
Right. So you're tapping into the ecosystem that the university has built up of startups that are kind of spun out of people who are at the university. But I was interested that you're going to investors and SMEs who are kind of looking for liquidity, I suppose, and that's an interesting angle, I think. Now, do you expect to when STOverse is up and running and you've got the market going and there's liquidity and activity and issuance going on, do you think you're going to end up attracting a different type of investors? A new, I don't know, retail investors, for example, are going to start coming into SME investing in a way that they can't now because those companies are inaccessible to them. Is that part of your plan, is to recruit?
Exactly. Yeah, great question actually. So our plan is so at the beginning is to let's start from the beginning how we tackle to get investors on board. So first, we want to partner with this private club of investors, as well as we want to actually lead on our platform some DeFi and crypto investors already. So people who are already educated on the topic. So we are present in some of now all the marketing on this part is done on Reddit and Telegram. So as we are up and running, we are going to be able to exactly just drop and get into this Telegram channel and make people interested into our project. So nowadays, exactly, a lot of marketing and those things is done on Telegram and Reddit. So this is good, and we want to tackle. We want to not tackle, but really we want the first user we want to get is some of DeFi and crypto investors who are already educated and can easily understand what they do. But where we see exactly when we look more forward in the future is really to educate in new investors. So invest like equity investor and educate them how they could invest into security token. This is really one of our mission, is also to educate a new kind of investors. And our first investors are probably those who invest in traditional markets in equity. And by educating them, we hope to actually bring them into our platform. So this is also our mission, is really provide a tool to educate our clients, our new clients somehow, or these new clients, potential clients.
Yes, your appeal to investors is pretty clear. You've got these investors in SMEs, they're looking for liquidity. That's quite easy to understand. But you're also talking to this class of investors who are already active in the DeFi markets. They've got used to dealing with liquidity pools that are operated by these smart contracts that balance the supply and demand algorithmically. So you've actually got a multi-pronged way of strategy for bringing liquidity to the market. Now, when you talk to those DeFi investors, how enthusiastic are they about what you're trying to do? Does it appear to them that you're a representative of some old world thing trying to intrude into their lives, or do they get it very quickly and think, well, this could be great, this could be another asset class we could start to trade or invest in?
So we have a mixed feeling about it. It's a mixed feeling. It's not like one or another. It's a mixed feeling because there are a lot of people who are actually educated, so they invest, but they only invest but they maybe don't invest in a really educated manner. I mean, they invest really just for speculative purpose. So they are not at all interested into actually investing into great product or great companies or great protocols. They are just there to make money, to be honest. This is one of the part. On the other side, we also have some users who are actually really they've been scammed in the past, and they are kind of frustrated about this ecosystem that sometimes it's really opaque and not clear, and then sometimes there are exactly scams that happen. And so we see that these users will be interested into some which provides them more security and unclear investments into a company. So we have this mixed feeling of people who are there just to make money and are not interested at all, while some are actually really interested about how this new ecosystem is developing and how exactly they could participate into projects who have a real value and a real economic impact. And so these are the two mixed feelings that we see, and the feedback that we got from some of these investors.
Irrespective of what they think, are you proceeding on the basis that the world of DeFi and the old world of CeFi are kind of converging on each other, that you're going to end up with regulated markets which make use of techniques that come from both the old world and the new, and then in a sense the security tokens are a kind of convergence mechanism for all the great ideas that are being developed in DeFi and all the old somewhat tired but still useful ideas which were created over hundreds of years in the world of CeFi? You think these markets are converging into a sort of regulated
totally
ecosystem? Yeah.
So what we are seeing is that there is a transition of there's definitely being a convergence of CeFi and DeFi, not just from a security token point of view, but in general. There are a lot of players out there who want to benefit from the high yield that today we can see into the DeFi ecosystem. So today we are actually, I know a lot of hedge funds and companies who are actually trying actively to enter into to actually invest into these DeFi protocols, providing liquidity mining and also staking, as well as lending and borrowing. So they're trying to actually benefit from those yields. As of today, is actually people, hedge fund and these companies are more investing into the tokens, but some of them are really trying to get into this and benefits from all these high yield. We've seen this convergence. So what I think is going to be is not going to be exactly like the DeFi is going to take off and the CeFi is going to completely disappear. I don't think it's going to be the case, to be honest. It's going to be more of an interaction of the two worlds. So what we are seeing exactly, we're going to see that exactly traditional systems going to have access to DeFi protocols, and they're going to benefit from them, and they're going to maybe offer access to the clients, to the people, to this new ecosystem. So what we're going to see is going to be an interaction of them too. And then, as said, decentralization is not the answer to everything. It's like for STOverse, we are centralizing what needs to be centralized, like the process of selection of some project, of some companies. But what is not needed to be centralized, like the secondary market, the issuance, and all these, then that can be centralized. So I think it's important always to remember what is important, what is important to be centralized and what can be used as decentralized, all in all.
Yeah. Florian, the legal aspects of what STOverse is trying to do, you've been advising the business on that. Can I begin by asking you one simple question? In the United States, we get used to issues being aimed at different types of investor and facing different types of regulation. Is it going to be possible for STOverse to distribute tokens to retail investors? Is that permitted under current Swiss law?
Well, actually, to start with, the situation of securities law is quite different from the US perspective and from the Swiss perspective. In Switzerland, if you as a company want to issue securities and tokenize securities as a self-issuance, it's not something that is per se regulated. So any company can issue its own securities, raise funds using the blockchain, and wrap these securities into tokens based on certain conditions. Now the Swiss civil law and the regulatory framework is quite clear. As a company that is incorporated in Switzerland can issue securities, bonds using the blockchain technology to wrap this up and sell that to the market. Now, if the company can issue the tokens, STOverse is a platform allowing this to happen in terms of technology. And then in order to offer that to investors, you will have to comply with certain rules and regulations, of course, in terms of prospectus. So you need to have some information contained in the prospectus. But if the issuance is below 8 million Swiss francs, or with tickets of above 100,000 Swiss francs, then the prospectus is not necessarily required. If a prospectus is made available to the investors, then yes, you can, and provided you comply with the Swiss law regulations, you can issue that to retail investors as well. It's not strictly limited to qualified investors or professional investors as Reg D would be for the US legal framework.
Okay, just to be absolutely clear on that point, Swiss law, the restriction which Swiss law places upon the distribution of these tokens is really about the size of the issue and the size of the tickets being distributed. 100,000 Swiss francs rules out unsophisticated investors at the outset, right?
Yeah, there's some exemptions for the prospectus, and that would be set on different average, investments. So 100,000 Swiss francs is the minimum ticket, and 8 million, below 8 million, it's not considered to be subject to prospectus. So there's some room for venture capital using the blockchain to raise funds, like for Series A or even Series B sometimes, using this technology to leverage and to find investors. The interesting aspect also is when you use this tokenized fundraising, you will create a community around your token issuance, and you will combine fundraising, marketing, and community building. That's the interesting aspect of STA.
Mm-hmm. You mentioned Reg D. One of the interesting things about American securities distribution laws is it is somewhat more protective of domestic investors than it is of international institutional ones. Is Swiss securities law more protective of domestic or than of foreign investors, or does this, what you've described, apply to investors wherever they come from?
I mean, as soon as you are a Swiss-based company and you comply with the Swiss regulatory framework, if you start offering the tokens on the market, like on the EU market, let's say, you will have to comply also with the prospectus directive of the EU market. So if you want to expand internationally, you will of course have to comply with the rules and applicable in the countries where you offer the tokens. So generally for a project like securities token offering, the US market is excluded because the securities law there is much more restrictive than jurisdictions in the EU or in Switzerland.
Now, if I understood correctly what you said at the outset, in effect, if a company decides to tokenize its existing securities, or indeed new securities which it issues, it's kind of up to them, and this is regulated under existing Swiss securities laws. There's no special provisions for tokenization. Swiss law hasn't been rewritten to accommodate security tokens in particular. Is that right?
Not exactly, because the Swiss legal framework as of this year has been amended to enable companies to issue tokens on the blockchain, to issue securities on the blockchain. So basically, it's called distributed ledger securities. And if you have a ledger that is based on a public blockchain like Ethereum or other type of blockchains like Cardano, then you can use this ledger to issue securities on the blockchain. So it's rather than issuing certificates, share certificates, then you issue tokens. So the legal framework for the issuance has been amended. The legal framework for the offering has not changed. It's still the prospectus provisions, investor protections that we knew in the past. But for the civil legal framework, yes, it's been amended.
Mm-hmm. And what's the advantage of those amendments to potential issuers and investors? Does it make any difference to them? Is this like a technical adjustment saying, well, these platforms exist, people issue on them, people trade on them, people invest through them. We need to recognize that in Swiss law. Does it have any material impact on issuers or investors, or is it just a technical change?
No, it has a material impact, and that's why the Swiss regulator actually quite quickly amended the law, because before this amendment, in order to be able to transfer securities using the blockchain, you needed to have a written form. That there was a written form requirement for the transfer. So with this amendment, it's providing some legal certainty to investors, because it's like when you have intermediated securities, and you mentioned in the law that by having some writing in your bank account, the transfer of the security happens. It's exactly the same now with a transfer on the blockchain. The token and therefore the security underlying is transferred using the blockchain. So basically what will matter is the distributed ledger, and that is legally recognized. That's one of the only jurisdiction in the world that recognizes this as a legitimate transfer of property over the shares. So it has a material impact indeed.
Okay, it's a form of investor protection, which ought to attract more investors to the Swiss marketplace, I guess. Now, what about STOverse itself? We've talked about investors and issuers. STOverse, if I understand it correctly, is now regulated under Swiss securities law. It has a license which is supervised by the securities regulator, FINMA. How onerous, how hard is that process of getting a Swiss securities license?
So STOverse is in process of getting such approval by the regulator. But what you need to understand is that there's one aspect also that made Switzerland a very attractive jurisdiction for blockchain project is that you can communicate with the regulator and you can get what we call no action letters from the regulator. So basically you can expose your case and get a ruling from FINMA, and you can discuss with them the interpretation of the blockchain project that you will be launching. So that's what is planned. Basically, what we do in cases like this is that we prepare all the documentation, also the investment memorandum for the investors. If we are above 8 million, we will prepare the prospectus, and then we submit that to FINMA, and FINMA will confirm that the company using STOverse can issue its own security using the blockchain. And once we have framework approval, then we can replicate that to other companies. So that's the legal framework for self-issuance of securities using a platform like STOverse. Now, there's another legal framework for securities firm. Securities firm can issue derivatives or underwrite securities of companies and then put that on the secondary market. So that's another story, because this is a regulated activity that is requiring some capital, 1.5 million minimum, and then FINMA will decide on the minimum capital based also on the leverage that you will be using. This is a license that will take up to 6 months to get, 6 to 9 months, and once you have that, you can also issue derivatives. You can operate a platform for having trading of securities, and you can underwrite securities of third-party companies. So that's another type of regulation, which is a bit more advanced, I would say.
Mm-hmm. So getting one of these securities licenses imposes real obligations in terms of capital and so on. The benefits, you've touched on those. You mentioned derivatives, for example. What can you do with one of these securities licenses you can't do without one?
With a securities firm license, it's basically you will be able to issue tokens that will have an underlying assets, so what we call asset tokens. It's commodities or other type of underlying, which you cannot do as a self-issuing company issuing your own securities. It's a different story, and this provides a lot of advantages, because you can have any type of underlying assets, right? So you can have bitcoins, you can have cryptocurrencies, but you can also have physical assets as underlying, and this will be using the blockchain to start trading, any type of derivative, and also, as I said, organizing a secondary market, which is actually key for having a mass adoption of security tokens on the market. And now we've seen the first, securities firm in Switzerland organizing this type of order books, and that also gives other companies access to capital, not only as primary issuer, but also on the secondary market. And the move towards secondary market is now happening with also the stock exchange in Switzerland going into the digital stock exchange, and also listing some tokens, security tokens, and tokenized bonds and derivatives. So this is a move that will actually really make some security token offering worthwhile for and mass adoption will be also going this path with this secondary market opening.
Now, as I mentioned at the outset, STOverse has this intriguing twist to it, which is that it's planning to build a bridge to a link to the DeFi trading platforms, where there's a lot of activity, lending and staking tokens already, and that will obviously help liquidity. The ambition is that will help liquidity on STOverse as well. Do the Swiss view on DeFi and therefore on the link which STOverse is looking to build to the world of DeFi?
Yeah, so when we talk about DeFi, there's many things that are actually included in this wording. There's the decentralized exchange. So creating, liquidity using decentralized platforms. This is something that is not regulated under Swiss law at the moment. Decentralized exchanges is not something that is in the legal framework in Switzerland. However, if you want to list a security token on an exchange, then if as soon as it is somehow centralized, you will be falling into the infrastructure market regulatory framework. So that is a gray area now. There's no clear position of the regulator on decentralized exchanges. Now it's been mainly used for utility tokens or other type of cryptocurrencies. As soon as you go with security tokens, it may be a different story, and the regulator may step in. So that's why we need to have some, clarity on the way the regulator will see that for STOverse. This is on the DEX side. If you speak about lending, lending security tokens, then you will be falling into the securities lending regulations and directives. So this is only some form of regulated activity. So we need to, the bridge between security token and DeFi is extremely interesting and promising, but we need to get some clarity on the way the regulator will see it. Now, what I can say is that the DeFi space is a space that we see regulators going to, and basically now what we see is that they are going with the lens of the KYC and anti-money laundering, and that's their initial aim is to regulate from the aspect of money laundering, from the perspective of anti-money laundering. So what I expect is that in 2022, basically for these type of platforms, there will be some additional layers of protection for the investors in terms of AML. And that's why, providing a gateway to access DeFi is for me a step that is actually mandatory, because basically the operator of this gateway, like STOverse or other type of financial institutions, will do the KYC, will hold the tokens in trust or in custody, and then allow that as financial instruments to their customers to access DeFi, and they will also have the risks on the financial instruments. They will have insurance for the protocols that they will be staking to. So I think this is a very interesting development in terms of finance, but it needs some additional layers in terms of regulation, and also it needs to be checked what type of protocols you will be using, because if let's say the protocol is a collective investment scheme and has, some discretion over the tokens and how they will be allocated in DeFi or liquidity pools, then potentially you will have to comply with collective investment schemes rules and offering of these products to your investors. So what needs to be done is to check the underlying protocol used, to check how they will be offered to the investors, and the investors will need to be onboarded in a compliant way. And under these specific conditions, then the DeFi space could be offered to investors on the market.
In practical terms, if an investor who's active on STOverse and the token he holds is regulated under Swiss securities law as amended by the adjustments to take account of tokenization, and he decides to sell that to somebody who's on a DeFi exchange in return for receiving some cryptocurrency token or a utility token of the type you've described, in effect, you're passing from a regulated world into an unregulated environment, and that's kind of up to the investor whether they choose to make that transition for the time being. But from what you've been saying, it looks like the Swiss regulators have already begun to think about this, particularly from a money laundering point of view. So KYC, AML, CFT, sanction screening checks on that transition will be put in place already. But in effect, you've got this unregulated world and this regulated world sitting alongside each other, and they get made to start to interact with each other. And it's the investor's choice whether they're happy with moving between those two worlds, from regulated to unregulated.
Yes, it's in the end the investor choice. Therefore, the investor must be, informed properly about the risks, and also what is extremely important is to define the counterparty risk. So who's going to be liable if there's a hack in any of the protocol? Who's going to be liable in terms of insurance, and what is covered by the financial institution that offers that to investors. So I think, information about the risks, insurance, and also the counterparty risk are key to be handled before going into this field.
And is there any limit to the type of tokens you expect to issue? Asset-backed, equity, debt, non-fungible tokens?
Mm-hmm. So no, actually, we are extremely open. So there are no. So the answer is there are no limits. There are no limits on the type of security we can actually offer to our clients, and this is due to we need to be flexible. We need to be flexible because each company has different needs. So we want to be able to offer them issuance of equity or issuance of debt in case they need. So what we can do actually nowadays, we can issue debt, equity, convertibles, and treasury. So all of these are actually, we can actually do them. What we will start at the beginning, which is what's been asked the most, is equity issuance to raise capital. So this is going to be our first thing we're gonna do, the first service. But of course, we can offer all type of securities, and there is no restriction on to that.
Now, let's look forward to a future in which these security tokens have been issued. The link is in place to the world of DeFi, and we'll come in a minute to how you make that link work. But what do you expect those DeFi investors to do with those security tokens? Much the same sort of things they do with their cryptocurrency tokens or utility tokens today, or will they do something different with them?
I mean, it's gonna be kind of how it is today. I mean, people will invest, and since they're gonna be listed, they of course they will hope for the appreciation of their tokens. But on top of this, as we said before, they're gonna be able to earn some passive income from staking protocol or lending protocol. I think it's not gonna be that much different from what we see nowadays. I mean, as people interact, what is going to be different from that is going to be the type of community that's going to build around. Because as I think also Florian said before, is actually interested how with STO and fundraising, a whole new type of community is going to be built. So investors not going to be just investing, but there's going to be more of a community-driven thing. And so that's the real thing that's going to change, I think, or the real how they're going to interact differently. It's going to be, once money is going to be raised for a project, it's going to be more of a community-driven thing, and people will probably, hopefully, what we are trying to do, like we'll be able to share tips and advice with each other and organize in this sense. And this is what on our platform people were going to be able to do. So we're going to really creating a community section where people can actually exactly interact with the companies, have a more direct interaction with the companies, ask them questions, but as well as they can interact with other members of the community.
To cut to the chase, have you chosen which DeFi trading platforms, liquidity pools you're actually going to link to? Are we talking Uniswap here or something else?
Yeah, so with the issuance of security tokens, we have chosen Arbitrum, which is a layer 2 solution built on top of Ethereum. So Arbitrum is a layer 2 solution which actually enables security, rapidity, and lower fees. While for the creation of liquidity pools, we are going to use, at the moment, we're going to use SushiSwap, which is somehow exactly, it was created on the same code of Uniswap, but based since it's built now, is deployed on Arbitrum, is going to be much more efficient, and the fees are going to be much lower. So that's why we're choosing nowadays. We're going to choose SushiSwap because Uniswap is quite expensive. So the fees are really, really high. And therefore, we need to find a solution which doesn't impact the investor too much whenever they want to sell their security tokens.
The fees are really, really high.
On Uniswap, yeah.
Yeah, but it's a material point across the whole Ethereum-driven ecosystem, isn't it?
Mm-hmm.
I was wondering, you yourselves have chosen Ethereum, if I understood you correctly. And you've got these proliferating blockchain protocols now, Algorand, Solana, Cardano, Polkadot, all these new protocols coming through, partly to address that question of high gas fees and so on. Now, is that a problem for you in building your ecosystem as you look, I don't know, years ahead, to find a way that these different blockchain protocols can interoperate successfully, so investors can be indifferent to what protocol a trading platform is built on? Do you see it as a problem in the long term or not? Do you think it'll be solved by technical means?
So exactly, today we are choosing, of course, Ethereum because it's the most known and the most standardized blockchain, the most secured and used nowadays. So that's the reason why we are anyway using a layer 2 solution on top of it, because the security of Ethereum is it's incredible compared to the rest. Mm-hmm. So how is seeing the rest of the ecosystem? So this is a great question, because anyway, for our project, we are blockchain agnostic. So we only use the technology to improve a system. We don't use we are not really deciding which blockchain to use. We are blockchain agnostic. We just want to use it for the best purpose. And we see other projects actually as a possibility, as an improvement, because people will get more and more educated and will learn more about blockchain and its ecosystem and how it works. So for us, it's not a threat for us at all, because as the ecosystem becomes bigger and bigger, people get more educated, and we are just using one of these solutions for the security of our STO. But we could actually use another one in case we need it. But exactly, for us, it's more about the education of the people and people getting more educated. And as this ecosystem grows, of course, it will benefit us because more and more people will get into it. And for us, is not a problem. The proliferation of the Algorand, Solana, Cardano, Polkadot is definitely just a great opportunity.
So there's no technical obstacle to investors in tokens issued on STOverse interacting with any of these other blockchain protocols?
No, yeah, there is an obstacle because our tokens are not you're not going to be able to buy our token on Solana, for instance, because our token is are going to be issued are not going to be issued there, because exactly each blockchain kind of it's on its own at this point somehow. There are some who are EVM compatible, but so our token are not going to be issued, for instance, Solana. So if you're only on Solana, you're not going to be able to buy our tokens there. So you need for sure to come to Arbitrum or Ethereum to buy our tokens. And so this is, of course, that's how it is. But we are confident that at some point bridges across all these blockchain are being built. So we're confident that also this in the future maybe is not going to be too much of a problem. But of course, there are some people who are sticking to one ecosystem or another. But for us, I see this definitely as an opportunity. As the ecosystem becomes bigger, everyone benefits from it.
Right. So there is a technical problem, but the short term, the bigger problem is educating the investors to make use of what you're doing.
Yeah.
Solved
totally.
in due course. So you're dealing with a bigger problem first. Now, if we look at your platform as a whole, how comprehensive are the services you're looking to provide through it? You're going to do the token creation, write the legal documents, issue the prospectus, do the issuance to digital wallets, the custody, the broking? You're going to do everything, is it?
Exactly. So for what we're going to do exactly is like for the companies, for the issuers, actually, exactly, we have the prospectus. We're going to open the bank account for the deposit. We're going to do the token creation beforehand. We're going to ask them the auditing of financial statement, the KYC and the shareholder register. So these are all processes that we have put in place for actually someone become our for someone to become the issuers on our platform. And those are some of the legal things that we need to do for our clients. Then from the investor side, like what we do exactly is a KYC for onboarding in potential investors on our platform. Of course, the wallets and all that part people need to be educated, and people will need to create their own wallet. We cannot do it. And then for the issuers, again, for the investors, all the benefits are going to be into using our lending protocols that we're going to design, and liquidity mining part, staking, and all that. So this is exactly which are the kind of, and other benefits are going to be on our platform. So a community platform really built around the community where people will be able to exchange, participate to events, follow people who actually post interesting things about some projects. So we really want to offer a great experience for both the issuers and the investor onto the platform, and not just being a platform which only match them, but really a platform which builds a community behind, where people actually have create the investments. We believe that investment needs to be also on the emotional side, not just investing for investing, but as of today, also what we see in the DeFi ecosystem, that investors invest for actually with an emotional side. So they want to be emotionally invested. They want to know the project. They want to invest with others. They want an experience. So we're on STOverse. We're also trying to recreate a great investing experience.
Mm-hmm. I want a narrow question. I think I heard you say you're not providing digital wallets. Is that correct?
Yeah, I mean, exactly, because we will the wallet. People will need to download their MetaMask wallet, and of course, for interacting with afterward with the decentralized application, of course, they will need their own wallet.
Mm-hmm. Okay, just some platforms seem to provide wallets as well, as you observed.
Mm-hmm.
You mentioned KYC, AML tests as well, these customer due diligence tests, something Florian brought up in the context of this being the one area where DeFi meets the world of security tokens, which the Swiss regulator will be very interested in what's going on there. How are you going to do those KYC tests? Are you working with third-party vendors and data sources, or are you?
Exactly.
You are.
Yeah, we are, exactly. So we also, to issue security tokens and everything, we need to be affiliated with someone, because we are not yet financial intermediaries. So we need to be affiliated with companies who are already financial intermediaries and can offer KYC and AML. So we're gonna partner with one of a blockchain company who is based in Geneva, would actually provide for us. Will do for us all these process of KYC and AML. And exactly, this is definitely one of the things that we need to do as the partner, until we actually will be able to integrate all this process into STOverse and provide them. So one of the first things we would like to achieve as STOverse is also to become a financial intermediary. So all this KYC AML, we will be able to do them ourselves and not depend on to someone else.
If I wanted to broke security tokens, do you provide a wallet, I suppose, some sort of service on your platform where I can, in the old world, would have opened an account with you or bought a seat with you? Yeah. I mean, I don't know whether you envisage here also market makers, lead brokers, i.e. people who will make prices in stocks when nobody else will. We're talking here about liquidity, really, about sources of liquidity. We've talked about that a lot. Clearly, your link to DeFi is a vital component of that. But talk about the actual roles. Are we talking about brokers, market makers, lead brokers playing a part in STOverse?
None, exactly. No, not at all. Because exactly, people will have their wallets. Will be on the platform. They will have their wallets and their security tokens. But how liquidity pool works, they are actually automated market makers. So we don't actually need market makers or lead brokers for all these processes. This is why decentralization here it's very interesting and can be automated, and we don't need any more a market maker like in the old system. Is because here the liquidity is always there. And the price is already determined algorithmically by the balance of the pool, and therefore we don't need any of this. And this part can be completely all automated. So once we bridge the security tokens to liquidity pools, actually we don't need to do anything else, because these market makers and all these operations that were historically done by someone are going to be completely automated.
Now, what's your commercial model? How are you going to building and operating this platform?
Yeah, we actually have three main revenue models. So the first one is the listing fee. So the first one is actually when a company, an issuer, wants to get into the process and be listed and create a fundraising campaign on our platform. So this is the fee, the first fee that we actually charge. Second fee is the fundraising fee. So once the security tokens offering is completed, we have raised a certain amount, we take a percentage of this one. And the third one is the transaction fee on sale. So whenever people want to actually bridge their token to DeFi, to the liquidity pool and sell them, we'll actually apply a fee. This is a bit to incentivize people just to sell whenever they want. So we are actually applying a small cut on whenever people will want actually to sell their tokens.
Now, where have you got to in terms of going live with the platform? What stage has your development and funding got to?
So as of today, we have a prototype. Our platform, we have a prototype that we are showcasing currently to several investors who are really interested, who have expressed their interest. As I said, there are some investors into impact investing, are really concerned with impact investing, and they are really interested in our solution, as well as for all these governance issues that can be improved. So we have a platform who's a prototype. We are fundraising. We are raising funds. We are looking for 500,000 francs for actually launch and get our platform live and up and running. And then the second part is actually launching our STO. This is to raise additional money to move on to our project. And so we need a certain amount to actually go live and launch our security token to fund. We need a developer and someone with the marketing side help us on that. And then before summer, more to be honest, probably is going to be September. We were going to launch our security token offering. So before doing it for others, for other companies and SMEs, we actually want to do it ourselves to learn and test on this. And then once this is going to be successful, of course, we will start doing it for the others. So but as a timeline, we are between before summer or after summer. Probably is going to be STO is going to be after the summer.
Right, so you're going to be using your own platform to raise your own capital, right?
Exactly. That's but that's how most of the utility token, how most of the blockchain project utility token have been done so far. So it's quite normal in the blockchain ecosystem to actually launch your own token and raise capital raise money for that. And it's a way, of course, because our token. It's because people with our token, they're going to benefit from them. So they're going to, by holding some of our token, people will be able to enter into pre-sales and they will have some benefits. So that's why it's important for us actually to do a security token offering, not just because we want to raise capital, but because people needs to, by holding our tokens, they will be able to have certain access and certain discounts on the platform.
I was going to say, it's fully in the spirit of DeFi itself, on your own platform. Florian, can I ask you just one final question? Clearly, interesting things are happening in the security token markets in Switzerland. You mentioned SDX. You're working with STOverse, but at this point, security tokens are largely potential. They've not attained scale at this point. So it's all about the future, not about the present reality. Do you have any sense, as you look across the clients that you've been working with, the developments you see in the Swiss market, do you have a sense that there's going to be a tipping point in security token issuance, trading, investing? And if you do, what do you think that tipping point might be?
Yeah. To be honest, I thought this tipping point would come a bit earlier, and it took some time for the secondary market to organize. Now we have a specific license in Switzerland for DLT infrastructure license, meaning that you don't need to actually use a custody and you can use the blockchain directly for having the tokens custodied and for the settlement as well. So you have this infrastructure using blockchain technology to actually trade, clear and settle the transaction, which is a game changer in terms of financial infrastructure. So as soon as now we have this license, and this license will be granted to other entities than SDX. Other are applying at the moment. So as soon as there will be additional players in this secondary market, that will be a game changer, and that's the tipping point you're mentioning, because capital will be provided to companies that tokenize their shares and then list that on this digital secondary market. I think this is the point that was missing so far for having mass adoption of securitization, tokenization of shares. And I think in the next years to come, that's going to be the way that capital markets will be functioning, because you have less intermediaries. And also you have direct access to the investors. You don't need to go through participants, through securities dealer, broker, to have access to the market. You can have a direct access, less fees, less costs, more efficiency. So I think this is the way that the secondary market will evolve, and therefore securitization, tokenization is the premise, of going into this direction.
Mm-hmm. Right. The tipping point is when the benefits start to become available to people. One last question. I'd like to ask you the same question that I've just put to Florian, which is that at the moment, security tokens, it's all potential. It's all in the future. It's not our day-to-day reality yet. What do you think is going to be the tipping point which tips the security token markets into a long, decades-long process of self-sustaining growth?
So as Florian said, regulation is going to be essential. And only this year, we have seen that Switzerland has actually allowed companies to issue securities on blockchain. So only this year, this has been, the law has been amended to do it legally. So exactly as he said, it was, I thought it would come earlier, but it's actually just started now. What I also see, so from our regulations, first point is the regulation, which needs to be clear, which every country needs to have a clear recognition of security tokens. And second is change the perception of people, because people, whenever they feel of token offering, all this, they're still thinking about ICOs in the 2017 and 2018. So we need also to change the perception of people around the investments into these securities, and we need to educate them, and people need to learn somehow or know that actually there's been a great evolution since then, and that security tokens offer legal rights, all legal rights as a normal investors. So there is the legal part which needs to be clear, and also the part where some people need to learn, and there has to be a small part of investor, a small adoption that will lead to a bigger, wider adoption. So, and also changing this perception of risk investments needs to change, and explain people that STOs are not only about investing into blockchain or crypto-related projects, but can really be about investing into real companies and into the real economy.
Well, let's hope, Francesco, that we've made some contribution to that educational process today. Thanks very much for taking the time. Thanks very much for taking the time to talk to us today.
Thank you very much. It was a great pleasure.
Florian Ducommon, thanks very much for taking the time to join us.
Thank you very much, Dominic. Have a nice day. Thank you.